I'm Priscilla Barrera with the Investing News Network, and here with me today is Howard Klein, who's founder of RK Equity. Howard, thank you so much for joining us today.
Thanks for having me again, Priscilla.
All right, so we're here at PDAC 2020. To start, I wanted to ask you, how are you finding sentiment at the conference and sentiment toward battery metals?
Well, before the coronavirus, sentiment started the year very positive in general for battery metals, but also I'm getting a sense from other people outside in the gold space and copper that I saw Rick Rule speak in the Vancouver show. He was talking that this looks like 2002, and that's when I kind of got into this business in 2002, and I didn't know it at the time, but we were at the very beginning of a long super cycle that I hope he's right. We'll see with the coronavirus, it's probably going to be delayed a little bit, but there's a general sense of risk on attitude in the market. The US economy is doing well. Tesla has gone parabolic, right, from the battery materials, in particular. The rest of the world's not doing great from a capital markets wise, but, and we also have the US election uncertainty, so I'm hopeful, that he's right. We have to get through a few things, but sentiment is biased positive, the uncertainty surrounding coronavirus, notwithstanding.
Yeah, so coronavirus definitely a topic here at the conference and globally. I wanted to ask you, what do you think is going to be the impact for the lithium supply chain, and what lessons do you think we can learn from this event?
I think it's going to slow demand in China for sure in the short term. Is it a 2-quarter event, a 1 quarter, a 3 quarter? I don't know. There are a lot smarter people trying to figure it out than me, but the number one takeaway for this is that reliance on China for supply chain is more of a worry than ever, right? So I was at the Miller-Thomson event. I saw Andrew Whittingham, the Nobel Prize winner, as well as Andy Miller, and they were just reinforcing the same. The world needs supply outside of China. European auto manufacturers, American auto manufacturers just can't rely on it. So I believe a tailwind, which I've been talking about for years, and with a 2030 vision, in the Lithium 3.0, that more attention is going to be paid to United States assets, to Canadian assets, and the China-Australia, or China-Argentina, is will always be very big and important. But I think you're starting to see even in Lithium Americas, the stock rose after Ganfeng, took control of the Minera XR project. In my opinion, that was because they started pricing in Thacker Pass as, and I think you'll see that more and more attention will be coming to companies like Piedmont Lithium, and in Canada, E3, and then there are some new technologies as well. This is not so much correlated to coronavirus, but the breakthrough energy ventures coming into Lilac, direct lithium extraction technology and the sustainability element of that, but most of those projects are in developed market economies, and I think the coronavirus is going to lead to more investment into DLE technologies in addition to conventional projects in good jurisdictions.
Okay, and speaking obviously specifically about lithium, would you say lithium has performed as you expected so far this year, and has this event, coronavirus and other events, changed your perspectives for the rest of 2020 at least, like in this short term?
Well, I think, look, I listened to the Albemarle live end calls, and SQM was just on the tape today, all of which are commenting about Corona impacting negatively 2020, so it's performed. We'll see what the demand is, but it looks like demand expectations, I think Albemarle predicted 50,000 tons growth this year. Will we achieve 50,000 tons? Because of coronavirus, I don't know, but the backdrop, and SQM said it as well, and everyone's saying it's never looked better. Again, with Tesla sales doing very well from China, and the market finally, pricing in, very good expectations. The ability for them to be able to raise $2 billion overnight quickly at very high valuations just shows that the momentum toward electric vehicles, and again, Stanley Whittingham was commenting just even for energy storage in America, the applications were just at the very beginnings of this. So this year, it may be a little bit worse than expected from a demand side, but I believe, I'm hopeful. I had a podcast earlier, middle of last year, where we called it, change the conversation, right? Which was a Mad Men analogy that the conversation is all about price, right? Everyone's just the price. Everyone's focused on the China spot price, and I was saying, let's change the conversation away from the price. And the fact that before coronavirus really hit, the first 6 weeks of the year, Argentina stocks were up. A lot of the lithium stocks were up, even though pricing was not going up, right? It was kind of still going down to sideways. So I'm hopeful that sentiment is decoupling a little bit from price, and people are starting to say and understand that with 2030 vision, if we're going from 300,000 tons to 2 million tons of lithium, that's 1.7 million new tons in 10 years. That's 17 wagenas, okay? That's 70 new 25,000 ton lithium carbonate or hydroxide plants. And those take 4 to 5 years to build. So investors are starting to understand that. Breakthrough Energy Ventures may understand it, but investors like Fidelity and Wellington and BlackRock and Putnam, major long-term investors, not just the short-term oriented hedge funds, are understanding that, and I believe have started allocating some capital to this space late last year, early this year. Ganfeng's the largest cap, lithium stock. It's nearly 10 billion. It's bigger than all of Albemarle, despite having, nearly half the lithium sales. It's trading with its own dynamic. I don't know if that's, Boston mutual funds doing that, or if it's Chinese speculation, or it's Chinese government directed, but there's a decoupling from price, I believe, happening. I hope that's sustainable. But the short-term earnings, visibility for Albemarle, for Livent, for SQM, for Ganfeng for 2020 are not great. What they'll be for 2021, 2022, to be seen, but interesting and exciting times.
Right. And you as an investor, has your portfolio changed in the past year? And how are you positioning yourself this year?
Yes, I sold out of all of my Ganfeng, right, because I think it's overvalued by traditional valuation metrics. And they reported their earnings. They only had $55 million in net earnings, so they're trading at 190 times trailing earnings, so that compares to 16 times for Albemarle. I still own Albemarle. I sold some of my Livent. Their guidance was, they're at, on an EV to EBITDA basis, they're 25 times. They're the midpoint of their reduced guidance, so, and there's Argentine risk and other things. I believe there's some M&A speculation kind of holding up Livent. There's been a lot of talk. There was a BMO conference last week, and I know a lot of people were asking questions about who's going to buy Livent. So, but I sold a fair bit of Livent, and some of it was coronavirus, impact, but also in the commentary from both Albemarle and Livent, it showed with their pricing negotiations, they were talking about lower prices for 2020. So they don't have any pricing power. For all the talk, and I believe there is an oligopoly, they didn't exert any oligopolistic pricing power. So I sold some of those. The only big-ish cap stock that I like and have added to a bit is Mineral Resources. I've loved that company for a long time. I think they were very savvy in the deal they did with Albemarle. They had fantastic results. They're correlated iron ore and otherwise to China, so you maybe hurt a little bit, but the valuation of that is very low compared to the other ones that I mentioned. I see most value in some of the names I mentioned earlier, that U.S. listed names like Piedmont, I think is very lowly valued. E3 raised a little bit of money, but relative to where Livent is investing in them at an effective price of $1.17, compared to 40 cents where they did this capital raise, there's a market disconnect. There's more enthusiasm in Australia, I see, for speculating on some of the early stage companies than there is on the TSX, and I think the legacy of Nemaska is impacting TSX sentiment. But I'm most focused on which are the companies that are underpriced, but still in advanced development, that are going to bring on production into 2023, 2024, 2025, that are differentiated and underappreciated. And I mentioned a few of those. The last one I'd mention would be Lithium Power in Chile. They got final permit approval. They have an MOU with Codelco. I understand, that's advancing, hopefully to, an agreement there. I know Chile has had surprising political risk in the past number of months, and a new constitution is coming, but, relative to other projects in Argentina, it's a high-grade project. They have good infrastructure and good skills in the country, I think, and it's not highly valued. Again, it's, the stock price has come down a lot, and so within that developer chart, I see the most value.
Right, and I know you've been talking about this, but when you're evaluating a new project and you're looking at different aspects of that project, what would you suggest investors should pay attention to? So before you choose some of the names that you mentioned before, what are you looking at when you're presented with a new lithium project?
I still very much believe in KISS, right? Keep it simple, stupid. So a conventional project, whether it be hard rock. Actually, you know what? I would apply KISS to conventional hard rock, right? That's important. If you look at the successes in Western Australia, you had Kidman, you had Wodgina, and Altura, and Pilbara, and even Bald Hill got into production, right? On time. I mean, some of them fell over because of just too much spodumene relative to the converters and offtake parties, but I believe conventional hard rock. So I still, again, very much believe in Piedmont. I do believe still that there's potential in Quebec and the North American Lithium and Nemaska. The process that they're undergoing. A lot of what their problems were capital structure problems. So if you embark upon projects with appropriate capital structures and are able to withstand it, because even I just heard Tangxi with their stage 1, Kwinana is running into yet another cost overrun. So, and Albemarle's had overruns. So you need strong balance sheets, you need good partners, and ultimately I'd prefer to see companies being bought. I don't really want to see a junior kind of going into production or even joint venturing and partnering, because if you're a big company and a small company, like in the case of Lithium Americas, I believe like with their Minera XR, that Ganfeng just taking control of it, it just leaves Lithium Americas very vulnerable. They have a lot of high debt, secured debt, and I'd much prefer to just see a buyout of that project in the way that you saw Kidman get bought out. Or it's a more balanced approach with Mineral Resources is a big valuable, value add company there. So I look for projects which I ultimately believe will become part of the oligopoly, as opposed to, I'd like the industry to just continue to have 4 or 5 big players. And there will be pricing power to those companies, because they're now meeting big volume buyers in the auto OEMs who are notorious for squeezing their suppliers, right? So investing in the lithium space, I want there to be high margins in the specialty chemicals business. So I look for projects that can be bought, by majors in good jurisdictions, relatively conventional. But like I said, I am intrigued by these direct lithium extraction plays, in part because you could prove out the concept in some of these for a smaller amount of money than proving out a bigger project, right? So you could figure out for $25 or $50 million if a certain technology like Lilacs or E3s or someone else's technology, and then it's very scalable, scaling out rather than scaling up. A project like Thacker Pass or back in Nora, you need to kind of scale up. You need to invest $400 or $500 million, and the same is true for most lithium brine projects, right? So if you look at Orocobre, they invested a lot, but ultimately grade and the quality of the material matters. You might have a bifurcation in this market between $5,000 or $6,000, low quality, low grade, technical grade, and still have that $12,000, $13,000, $14,000 price for battery quality. And execution matters, ability to kind of do that, and brines are more difficult to do that. But if these direct lithium extractions can get the quality, right, and the scalability, and it only costs you $20, $50 million to test it, I believe it has real potential. And I think most of those projects have the potential for 2025 and beyond. So I am, my deviation from KISS, I'm saying KISS DLE to some degree, I'm saying kiss clay, with Bacanora, right? Because Ganfeng is there. We'll see what happens with Thacker Pass. I mean, some people, it's right in Tesla's backyard, but Tesla has shown some affinity for DLE in the past. They've shown some affinity for, they had an MOU with Bacanora back in the day, so who knows what'll happen. I'm hopeful, I've predicted that 2020 or 2021 we'll see someone like a Tesla, someone like a Volkswagen actually integrate all the way upstream. And then think about it, like if you're Piedmont, if you're Thacker Pass, if you're E3 and you need $250, $500 million, wouldn't you be happy to take Tesla paper, which you could sell in the market in one day with the liquidity, in the same way that Maxwell, the battery company that they bought, did? So it would be awesome if a Tesla kind of came into any one of these assets, or Volkswagen did. I think it would then catalyze many other companies to do the same, and it would result in a re-rating in a lot of these, higher quality, good jurisdiction, relatively advanced projects.
All right, Howard, my last question for you today. What factors are you going to be watching for the rest of 2020 that can impact the lithium space?
I think Tesla's Battery Day in April is going to be very big. I can't really speculate so much on that, but they were talking about 1 terawatt. That's an enormous amount. So I think that will drive sentiment toward Tesla, and more short covering potentially in Albemarle and Livent and the like, and coronavirus notwithstanding, we'll see about those things. I think you might have China stimulus as well, as a result of a slowdown here. And then lastly, I'm watching European sales of new vehicles, right? So all the new models that are coming on in Europe in particular, but also in the US, to see how well they're selling, because some of the new cars that came last year didn't sell as well, but the European sales numbers from January and February from certain countries, I think Italy and the UK and France, are coming out of the gate pretty positive, and I don't think that could displace the very dramatic slowdown in China. But if you do have this take up in Europe, it's like Europe is the new China. I've been saying it's further tailwind.
All right, Howard, thank you so much for joining us today.
Thanks for having me again.
Right, once again, I'm Priscilla Barrera with the Investing News Network, and here with me today is Howard Klein of RK Equity.